What's going on, traders? In this video, I'm going to be going over identifying head and shoulders pattern, or at least how I go about identifying head and shoulders patterns. And I got this video idea simply from someone in my YouTube comments that pretty much disagreeing that this is a head and shoulders pattern, and it's very dangerous for me to assume that it is, and that I'm being biased and all this other stuff. And I thought, you know what? That's actually a good video idea. Let's make a video on how I identify head and shoulders patterns. No shade to that guy. If he wants to disagree, that's by all means he can agree to disagree. So no issues there. But I really thought this was a good video idea. So you guys let me know what you think after you watch the video. So I think I'm pretty good at identifying patterns. And right now we're looking at Microsoft weekly time frame. So in order for us to identify head and shoulders pattern, we have to understand what constitutes as a head and shoulders pattern. So we go to schwab.com and we pretty much look up what we are looking for when it comes to identifying a head and shoulders pattern. So first we start with the left shoulder. The left shoulder forms when investors pushing a stock higher temporarily lose enthusiasm. All right, so we're looking at the weekly time frame. We see that investors were pushing Microsoft higher, and then eventually they started to lose enthusiasm. We declined, thus starting a potential neckline. Next, how do we identify the head? The head forms when enthusiasm peaks and then declines to a point at or near, keyword is near, the stock's previous low. Interesting. So we declined here and then we start to gain enthusiasm. Investors gain enthusiasm, they gain enthusiasm, and then we peak and then we decline back to the previous low. Interesting. So previous low is right here. So this will constitute as a shoulder and a head so far. So far we're following the rules of Schwab.com. All right. Next, what identifies the right shoulder? The right shoulder forms as the stock price rallies once again, but fails to reach its previous high before falling again. Interesting. So we rally once again, and this is the weekly time frame. It probably looks more like a rally on the smaller time frames, but we rallied once again, and we failed to get even close to the previous high, and now we are declining once again. So by definition, by Schwab.com, so far it looks like we're following the rules of what identifies as a head and shoulder pattern. A fourth component, the neckline, is formed by drawing a line underneath, blah, 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 established just before and just after the head. So we form our neckline just before and just after the head. So here is our neckline. So our neckline is at around, I want to say 388, 390 range. So if we break below this neckline, chances are, or a good chance, that Microsoft can go lower from here. We go down to the daily time frame. We go down to the daily time frame, and as you guys can see, it looks even more like a head and shoulders pattern, or at least it looks very identical. And so we go to Google Images, and we can see left shoulder, head, right shoulder. Let's do the math here. Left shoulder, head, right shoulder. Left shoulder, head, right shoulder. I don't know. Neckline? I don't know. The math is mathing right now, people. I don't know. 1 plus 1 equals 2, and right now it's looking like it's adding up. Okay. So now let's get rid of all this. Let's identify more head and shoulders pattern. Let's see if we can just identify them by Schwab's rules. Okay. So I already see one. I see an inverse head and shoulders pattern. Okay. So all we do, we identify the shoulder right here. We have a head here. We have another shoulder here. Our neckline is right before and right after the head. So boom. Would you look at that? We have an inverse head and shoulders pattern, and look what happened once we broke the neckline. You broke the neckline and you started to rally higher. Very interesting here. Very, very interesting. Okay. So there is a head and shoulders pattern. I already see another one. We scroll back and we see another head and shoulders pattern, an inverse head and shoulders pattern, actually. So you have your shoulder here, you have another head here, you have another shoulder here, and your neckline is right there. Boom. Clean, super clean, okay? You break out, retest. This was ugly. I probably would have got out of this regardless. But if we broke back out, then I definitely would have jumped back in. And look what happens. You start to rally to the upside. I mean, clear as day. Let's look at another stock. Let's Google is right after Microsoft on my watch list, so we'll just look at Google. Let's see if we find something on Google. Oh, there it is. There it is already. We're on a daily time frame, by the way. Head, shoulder, and this is the inverse head and shoulders, by the way. Okay. And look here, neckline. Boom. You broke out, you retested, you break out even higher. Clear. Clean as day. Okay. Now, a misconception that a lot of retail traders have is that Head and Shoulders follow some super complicated rule where it has to be super upright and has to look exactly like a human. Again, the market does not care about your rules. It just does not. Okay, it doesn't care about how perfect a Head and Shoulders pattern is. Okay, it just it just does what it does. Okay, the market doesn't care about perfection and it doesn't follow any Google rules. Okay, in regards to patterns. Okay, but here's another Head and Shoulders pattern right here. You have your shoulder here, your head here, and you have another shoulder here. Your neckline is right, boom. There you go. And look what happens once you broke that neckline. I mean, I can do this all day. I genuinely can do this all day. Let's go to a smaller time frame because I think it's just too easy when it comes to daily and weekly and all that because they're much bigger candles, right? All right, so let's try to identify another head and shoulders pattern. I already see one. It's hideous, but it's a head and shoulders pattern. You have your shoulder here, you have a head here, you have another shoulder. There it is. Here it is. There we go. Your neckline, you can go about your neckline two different ways. You can either consider this your neckline, which I wouldn't, but I can see why someone would make that mistake. But right here will be your neckline. Why? Because it's right before the head, which is down here, and right after the head, which is right here. So this will be your neckline. All right. And look what happens. You break out to the upside. Very, very simple. Here's another one. We'll do one more. You have a shoulder here. You have another head here. You have a shoulder here. I said another head, but you have a head here. All right. Your neckline. Where is the neckline? The neckline right before. Okay, this guy right here. Okay, there we go. Boom. And look what happens. Clean, guys. Very, very clean. What happens? You break out, you retest the neckline, and look what happens. So I think I'm pretty good at identifying head and shoulders patterns, just in case, someone else wants to argue with me about head and shoulders patterns. So that's pretty much the video. Now, how do I go about identifying or going about just confirming that another shoulder is forming? I just simply look at the options chain. If the options chain is in line with this potentially, we go to the weekly time frame on Microsoft, for example. But if the options chain is in line with get rid of all this drawings. But if the option is in line with all of this and in line with this other shoulder potentially forming, and what I mean by that is if we go to the options chain and we see that whales are bearish while the shoulder is forming, there's a good chance that the right shoulder might end up forming. A very good chance. If whales continue to be bearish, then I'm going to assume that this shoulder is going to form, especially when we're talking about 390 puts, right? We got 395 puts, 397.5 puts, 400 puts, okay? If they're doing that and we're still above 400, I'm going to assume that all the way down to 395 is pretty much right here. So if they're trading 395 puts, that's right here. And we're back at the neckline, okay? We're at the neckline at that point, thus giving us our right shoulder. So hopefully you guys got something out this video. Let me know if you agree, disagree in the comments below, and I will see you in the next video, traders. Until then, have a good one.